Hello, and welcome to Global Finance Desk. We'll explore practical ideas to help you. I'm glad you're here. Let's learn together.
Most people think the stock market is a place, a building, a website, an app on their phone. It isn't. It's something much stranger. Every weekday, billions of dollars quietly move from people who need money today to people willing to wait. Almost nobody notices that's what's actually happening. Because while headlines talk about prices, the real story is about time. And time has always been the world's most valuable currency. Every company begins with the same problem. Not a lack of ideas, a lack of time. Building factories takes years. Designing new products takes years. Hiring thousands of employees takes years. Expanding into new countries takes years. Time is expensive, so companies look for a shortcut. Instead of waiting decades to slowly save enough money, they sell tiny pieces of themselves. Those tiny pieces are called stocks. Most people hear that definition once and move on, but hidden inside it is one of the biggest financial inventions ever created. Because the moment a company sells shares, it turns its future into something people can buy today. Think of it as the future exchange, not a stock exchange, a future exchange, where tomorrow is constantly being traded. This is why stock prices seem confusing. People assume they're measuring today's business. Often, they're measuring tomorrow's expectations. A company can earn billions this year, yet its stock falls. Another company barely makes a profit, yet its stock rises. Feels irrational until you realize investors aren't purchasing yesterday. They're negotiating over the future. Imagine reserving a hotel room for next summer. Nothing has happened yet. The room is still empty. Its value changes depending on what people expect next year. Stocks work in a surprisingly similar way. The market isn't always asking, what happened? Asking, what happens next? Now, something even stranger happens. Most people spend their lives exchanging time for money. 40 hours, 80 hours, another paycheck. The cycle feels normal because almost everyone around them is doing the same thing. But companies are doing the opposite. They're trying to buy time with money, and investors are trying to buy future earnings with today's money. Three completely different relationships with the same resource, time. That's why wealthy investors often sound patient. Not because patience is a personality trait, because patience is the product they're purchasing. Psychology makes this difficult. The human brain loves certainty. A paycheck arriving every 2 weeks feels safe. A stock rising over 10 years feels abstract. We're naturally drawn toward immediate rewards. A new phone today, a vacation this month, free shipping. Buy now, pay later. Every advertisement understands this better than most people do. The future is invisible. The present is sitting in front of us. Our brains almost always choose what they can see. This isn't stupidity, it's survival. Thousands of years ago, immediate rewards kept humans alive. The problem is, modern wealth is built in a completely different environment.
Here's where the numbers become interesting. Suppose a company earns $1 billion this year. Next year, it earns $1.1 billion. Not because prices magically increased, but because it built another factory, sold more products, reached more customers. If you own a tiny share of that company, your tiny piece now represents a business that's producing more than before. You didn't work extra hours. You didn't ask your boss for a raise. The business expanded, and your ownership expanded with it. That's the difference many people overlook. A salary usually grows one negotiation at a time. Ownership has the potential to grow with an entire organization.
But here's the misconception that traps many beginners. They believe stocks are pieces of paper that become valuable because someone else is willing to pay more. Sometimes that's true in the short term, but over decades, the strongest businesses usually become more valuable because they solve more problems for more people. Think about the companies behind your morning coffee, phone, your online shopping.
your streaming services, your medications, your electricity. Whether people notice them or not, these businesses are constantly competing to improve, expand, and earn more. Buying a stock isn't simply betting on a ticker symbol. It's choosing whether you believe a business will create more value in the future than it does today. A stock certificate is only the receipt. The real asset is the business itself.
Of course, not every company succeeds. Some disappear, some shrink, some make terrible decisions. That's why investing isn't about predicting the future perfectly. It's about accepting that the future belongs to probabilities, not certainty. Ironically, many people believe avoiding stocks feels safer, yet they rarely question another risk, being every dollar in cash while prices quietly rise year after year. Money standing still in a world that never does. This changes the way financially intelligent people see the market. They don't see flashing charts or green arrows or daily headlines. They see thousands of businesses solving millions of problems across the world. They understand they're not trying to outsmart tomorrow. They're trying to own a small part of it. It's a very different mindset because wealth isn't always created by chasing money. Sometimes created by owning the systems that produce it. And that's what a stock has quietly represented all along. Not a lottery ticket, not a number on a screen, but a claim on tomorrow's productivity.
The future exchange never closes. Every trading day, people decide whether they'll spend today or own a little more of tomorrow. Most never notice that's the decision they're making. Now, you will.
Welcome to your financial future. Together we can build your fund. Let's track your progress. Subscribe now and let's get started. Just click the button today.